This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe Rabil. Welcome back to the channel. So what I want to do today is go into the specifics of why price is more important than the indicators. All right. I know I do a ton of videos on indicators, MACD and ADX and RSI, and all of those indicators are phenomenal supporting evidence, but you have to understand how they're calculated and recognize sometimes that price is going to give you a signal well in advance, especially when there's a reversal and especially when there's more volatility. So let's go ahead and get into this example. And I've actually got the S&P chart up. I've got an hourly chart on the left and a 10-minute chart on the right. Now, I mean, again, I'm using intraday an intraday movement, but this happens on longer term timeframes all the time. So what I'm going to teach you today is applicable in all timeframes. All right, so let's just start, and I want to look at this and evaluate this pullback, and this is the same pullback. So this pullback here is the pullback on the 10-minute, all right? And what we're doing is essentially taking an x-ray of this move here, and that's what's showing up here. And we get a lot more detail, and that's why we want to use multiple time frames. So first of all, to set this up, recognize that on the hourly chart, we've got rising moving averages, we've got a good slope to them. They're running at about parallel. Prior to this pullback, we had confirmation here, confirmation here. Yes, we had some DI divergence, but whenever I see DI divergence, I'm thinking pullback. I'm not necessarily thinking reversal, especially when the trend looks this strong. So we get our pullback, and it's pretty harsh. You can see in this big, huge bar that developed, and that's essentially what's taking place here. Now, during that pullback, and what I teach is when we get overrun of the MACD, right, we don't want to take the first signal coming back up, all right? When we get huge negative ADX reading on the sell side. So this is the decline phase, and we're getting a pretty strong reading. Now, it isn't as strong as the buy side. You see the last buyers were actually stronger than that last move. Even though red popped up, if you compare the two peaks, so this is a plus peak in ADX and this is a minus peak. And if you notice, this is still stronger than this. So that keeps our bias to the upside. However, normally what I teach is when I see this kind of violent behavior, I don't really want to be in a big hurry to run back in. All right. But if you notice the way this played out, and if we just isolate the price action for a second, look at the way this played out on the smaller time frame. We got a monster bar to the downside. Okay. And look at how this bar was the low bar of the move. Huge decline, and that's the low of the move. Now we paused a few bars as we were turning back up, but then it turned back to the upside, and it violently went right back up and took out this high. All right. Now again, this is taking place on a 10-minute chart. So this is one 10-minute bar, and I would say within a half hour to 40 minutes, we're back above this big bar here. Now, when we go back and look at the indicators, this is still way down here trying to recover well below the zero line. And then when we get back above this high, it does cross above the signal line, the MACD does. But ADX is lagging dramatically. We don't get green DI to really get cooking until way back here. Look at how far. Do you see how much this has to go up before we get real improvement in green DI and the buyers? That's legitimate improvement. That pullback would be a viable pullback. These are all just getting back above and then crawling back below the 25 line. They're not really as convincing to me. Now, I'm being a little bit dramatic with this, I guess, because the fact is that it was above and it was holding red. But the point I'm trying to make is that there's just significant lag to ADX and a lot of times to the MACD as well. And if we start to focus in on what is actually taking place with price, I think we can feel a lot more comfortable with what's taking place. This big decline all happened in 10 minutes. And there was never follow through from that. And then we showed a strong move to the upside and overcame that. So yes, this is causing this to overrun and this to pop up and show a big negative reading. But based on the way this played out, I think you want to be looking to play this pullback here and this pinch play that actually developed here, right about this bar here, I think is an entry. All right, even though we don't really have a good look here, right? And this is, still pretty seriously below the zero line. I'm taking into account what's going on from a price standpoint. The price is more important to me than the indicators, especially when we're looking at the trigger time frame and we're trying to get in this trend here. Okay, we know we've got a lot of good momentum behind it. We know we've got a good looking pattern or trend in place. So we got to be careful about getting leaning too much on ADX. I know I spent a lot of time looking at this counter trend move, and I don't want it to be too strong. We want it to kind of be low. But in this case, if you identify what's actually taken place and how fast it recovered, you can see that this just can't catch up. It's just not showing the same type of strength coming back to the upside because of the way the indicator is created and how it's calculated. It just is not going to see this signal here. Now, I mean, you could play it here or you could play, the next couple moves after that. But I'm always trying to find that first pure entry that's getting me in back in this trend close to this moving average. Remember, I want to be in as close to this MA as I can. That's my goal. If I can do that using this time frame and reducing the risk. So if we look at it and say, well, why don't we just do it on this time frame? The problem is, well, when do you do it, right? Do you get in above taking out this bar here and then put your stop way down here, or you wait for this to be taken out and then have to put your stop down here? If you see the way this plays out, you really, because we're taking an x-ray of it, we can see in more detail and use a tighter risk if we want. And we can also improve our timing because we know once this line is in conjunction with this line, now we've probably got a pretty good chance of things starting to move up again. Now, the fact is on this test here, it overran a little bit, but MACD was holding. So despite the fact that this really wasn't showing what we're looking for, I think this is a really good example of how we can actually be early and take this. Now, it's the second entry. Remember, when I get overrun, I'm saying I don't want to play the first one. I'm not playing this. But I'm going to take a really hard look at the second one, and I might completely override the ADX if I see price improvement like I do. Look at the size of these big green bars, right? Yeah, that was a pretty big red bar that counteracted this. But remember, we had this huge move to the downside, and then we basically took it out. So I think you can take a really hard look at this pullback to get you in on this trade. Let me just give you one more example. So look at this pullback on the 10-minute. Again, look at the rising moving averages. Now I'm going to switch this to a 2-minute. I want to just show how the markets are fractal, and we can see these same patterns developing in all different time frames. Now, in this case, we get this pullback, and it actually doesn't look that hard, right? It doesn't look like a really violent decline, but because it took a little while to start to pull back, you got overrun here, similar to the last trade. ADX is still in a pretty good shape. We're pulling back to the rising moving average, but look at the way this did this. Serious overrun, and we got a little bit of red, but no real strength to the ADX. However, because there's overrun, we don't want to play the first signal, just turning this back up and playing this. We want to play the second one. That's here. That's the pinch play right there with green DI in agreement. So the funny thing is that this trade actually didn't pull back as hard as this trade did. But I'm taking an earlier entry on this based on the way the price reacted. And in this case, I didn't have the same type of violent behavior in the price. So it was very hard to be too aggressive. So we're going to play this first higher low. That's the signal. Use the green DI. You see what I mean? So just follow the rules, but I do want to make sure. So I'm giving you a lot of rules in my course. But what I want to make sure you understand is that the price does lead the indicators, and we always want to follow them and what they're doing and follow their lead. And if we want to take a slightly earlier entry, we can do that in this case. So I get a lot of questions about this, people asking about entries, and I hope this clarifies some of the guys that have been asking those questions. All right, we'll see you next time.